The big, beautiful bill is finally law. Let's go over these tax changes and stick around to the end. I'm going to tell you about what I see is the biggest tax break, I think, ever, and not enough people are talking about it. So let's go over these tax changes. So starting with some of the more obscure ones, opportunity zones have been made permanent. Those are vehicles for deferring long-term capital gains. Think of it as another form of like-kind exchange. That has been made permanent, and they designate these zones every 10 years. Qualified small business stock, if you invest in a C corporation, it's been eased, and it's also been shortened the time when you can start to exclude gains on those stocks. Now, any child born between 2025 and 2029, you could open an account and get $1,000 free in a tax-deferred account. Between 2025 and 2028, $10,000 of certain qualified vehicle interest can be written off. You'll see that it's a theme in here. There's a lot of temporary provisions between 2025 and 2028, so you hear me refer to that as temporary in here. A deduction for $12,500, which is temporary on overtime, subject to income limitations. So in other words, if you make too much money, you don't get that. And that's only for certain non-exempt employees. There's also a $25,000 tip deduction on certain employees, subject to income limits. That is also temporary. The loss limitations placed for pass-through business losses, that has been made permanent. The state and local tax deduction has been increased from $10,000 to $40,000 with an income limitation, and it phases out over a certain amount. The QBI, the 20% business deduction, has been made permanent, and they've also eased restrictions on SSTB businesses, so like accounting firms, doctors' offices, any of those skilled labor. You now get to phase in a little bit faster to getting those deductions with less limitations. For individual filers, the now get a $1,000 charitable deduction even if you do not itemize. For those that are itemizing, there's a 0.5 percentage point floor, meaning you have to donate more before you get a write-off if you are itemizing. The child tax credit has been increased from $2,000 to $2,200. The standard deduction has also been increased. Now let's get to some of the more meaningful business changes here, where we get into the real interesting meat of it. There has been a lot of international tax law changes. If you're a company that does business internationally, you want to be looking at those changes. That's going to certainly impact tax planning. A lot of the green energy tax credits are getting phased out sooner, some of them this year, some of them next year. Bonus depreciation is back in a big way. 100% bonus depreciation of fixed assets that you purchase, as well as if you're a company and you have research and development, you had to capitalize that and amortize it while taking the R&D credit. Now you can expense it and take the R&D credit. That's a significant tax savings. And now the biggest one that I think a lot of people are missing, which I think this is huge, Section 168N, bonus depreciation on non-residential property placed into service between 2025 and 2029. And this is 100% write-off of a building. This is a huge, absolutely huge opportunity for people, and it can be expanded up to 2031. And if you sell it, it's subject to ordinary recapture rates as opposed to the 25% Section 1250 rate, which makes sense because usually you have to write a non-residential building off over 39 years. So think about buying a building for $10 million and getting an immediate write-off, and that's if it meets certain requirements as in US manufacturing. So that is a huge incentive to boost manufacturing and a huge opportunity for money to flow into buying non-residential buildings for US manufacturing. Now, everything I described to you as income limitations and certain requirements that had to be met in the fine print, this is a fast, short video. We can't possibly touch on everything of an 800-page bill, and there's going to be Treasury regulations and other things that modify this. But certainly, if you're an investor, if you're a business owner looking to put some capital to work, buying a piece of property and getting an immediate tax write-off is something that's going to continue to appreciate if you're looking to get into domestic manufacturing. I think that is a very interesting and huge tax break that not enough people are talking about, and a great opportunity.